So Chapter 17, job order costing. So our learning objectives, we're going to distinguish between job order costing and process costing, record materials and labor costs in a job order costing system, calculate the predetermined overhead allocation rate, and allocate overhead cost. Record the completion and sales of finished goods, adjust for over-allocated and under-allocated overhead, calculate job cost for a service company.
Excuse me.
Yes, ma'am.
Could you please open next week in Moodle so I can download those slides?
Okay, yeah, oh, right now? Yes,
Yes.
ma'am. Yeah, let me move that for you real quick. Let's see.
The way that my Moodle is set up, I can only access week 1. I don't have any other.
Yeah, I'm opening that now.
I did not hear that part.
It's okay. I'm going to readjust some things, but I am just going to make it to where you can see. You can open the PowerPoint now, correct? You may have to refresh.
I got it now.
Okay,
Same here.
perfect. Okay. All right, so record the completion and sales of finished goods, adjust for over-allocated and under-allocated overhead, and calculate job cost for a service company. Wait for the train. Okay, so distinguish between job order costing and process costing. This is on page 871 is where chapter 17 starts. So how do manufacturing companies use job order and process costing systems? Product costs are accumulated in cost accounting systems. Knowing the unit cost helps managers to set selling prices that will lead to profits, compute cost of goods sold for the income statement, compute cost of inventory for the balance sheet. How do manufacturing companies use job order and process costing systems? So we have some examples of unit cost. When we think of managers in a fast food restaurant, they need to know how much it costs to make a cheeseburger. If they don't know how much it costs to make a cheeseburger, they might sell the cheeseburger for way too not enough money, and then end up, going broke because they're not making enough to cover how much it costs to make that cheeseburger. And it's not just the bread and the meat and the cheese and all that good stuff. It's also how much does it, it's also, they have to add in the cost of the cookware. And I mean, all of that is included, little portions of that is included into this cost. Managers of a freight service, they need to know what it is to transport a pound of freight for a mile so that they can know how to charge for their transportation services and what to charge. Automobile manufacturer, what does it cost to make a car? Construction firm, what does it cost to build a house? Accounting firm, what does it cost to prepare a tax return? So job order costing is a system It's an accounting system that accumulates cost based on the job. And a job is the production of a unique product or specialized service. It may be one unit, or it could also be a batch of units. And so here we're just looking over, and it says you've got unique products. You've also got cost accumulated by the job. In a process costing system, this is an accounting system that accumulates cost by process. It is used when companies manufacture identical units. So making our tablets for Smart Touch Learning, we're making all these identical tablets to sell. So we more than likely use a process costing system, and the costs are accumulated by the process. Which one do you think might be more efficient? And most jobs are either or. But for example, when you have unique products and you're processing by job, an example of this could be, and they gave us some examples over here of different types of services, but like a construction firm is probably more job than process, because when they're building, no two items are exactly identical. I mean, there might be something different. You may have you can even say when they're building a house and every 4 houses is the same floor plan, but the land could have been, maybe this land had to be flattened and graded and the other land was perfectly ready. And, so there are still certain different processes. So normally construction would be job, and the products are different or unique in some kind of way. But then when we go back to the hamburgers, that might be more process, because, we go through this process of making these hamburgers repeatedly, making the same thing. So eventually, more than likely, you're going to get really good at making hamburgers. They're all the same, so that might be like a quicker process for you, or a less costly way to go, if that's right. But again, I also mentioned, more than likely you fall within one or the other. So hamburgers probably aren't going to fall under a job order costing. You don't make a special hamburger for every single person. So it's not a unique product. But just to kind of give you an idea of the two, these are more unique. And when it's more unique, normally we use job order costing. When it's identical, you could think you could set it on an assembly line, so to speak. That's more of a process costing. So recording materials and labor cost in a job order costing system. So how do materials and labor costs flow through the job order costing system? This is on page 874. Companies use a job cost record to document the product cost for each job. So this is an example of a job cost record. And we see here we've got 3 different jobs going on. We've got job 27, job 28, and job 29. They're all in different stages. So job 27, it looks like, so we have our direct materials, direct labor, and manufacturing overhead all rolled into our work in process inventory account, which means what? We've pulled together the materials and we're working on creating the job. Job 27 then moved out of work in process inventory and over to finished goods. Because we see here it moved out and over to our finished goods inventory. And that means that we completed everything we had to do for this job. We finished it and it was ready for sale, and that's why it was in finished goods. But then we sold it and it moved over to cost of goods sold. So job 27 is fully complete. Job 28 moved into work in process. We were putting everything together, pulled all the materials together, and we're building it, creating it. Then it moved over to finished goods. So we did finish creating this job, completing the job, but it has not sold yet. So it's still sitting in finished goods. It has not been sold. And then job 29 is sitting in work in process. We've got the job, we've got the materials, we're starting to put this together, but it has not been finished yet. It's not ready to move into finished goods. Materials. Purchasing materials. These are often stored for later usage. Using materials in production. When we use materials in production, they're either classified as direct materials or indirect materials. And again, direct materials are directly associated with the product. Indirect materials cannot be easily traced to the product. Note, materials purchased and materials used in production are usually different amounts. Usually we don't buy the exact amount of materials that we're going to use in production in that same period. Normally we probably maybe we bought extra materials because we thought we would use more, or maybe we already had some materials left over from the last period, and so we didn't buy as much this period because we still had some materials left over. So normally the materials purchased and the materials used in production are different amounts. Journal entries. So here we've purchased a material. So on page 875, during 2018, Smart Touch Learning purchased raw materials of $367,000 on account. This is a product cost that accumulates in the raw materials inventory account. And to simplify the recording process, we're going to record the material purchases as a summary journal entry for the year, rather than showing each individual purchase. So the purchase is recorded as a debit to raw materials inventory of $367,000 and a credit to accounts payable for $367,000. And in your book, it also shows the T account for raw materials inventory. And so you'll see that we started with a debit balance of $70,000, and then we debited $367,000 from raw materials inventory. We took the debit in our journal entry and we debited it in our T account. This is the raw materials subledger or subsidiary ledger. So here we've got the use of a subsidiary ledger allows for better control of inventory because it helps to track each type of material that's used in production. So we've got the materials when we received them. So on December 5th, we received 200 units. They cost $55. So 200 times 55, total cost is $11,000. Then and so that's what we received. We didn't issue any during that period. So then our balance on December 5th was the same. Then on December 10th, we didn't receive any, but we issued some to be used. So we received a materials requisition or a materials request. The request number was request number 334, kind of like an invoice number or a bill number. This is the request number for the material usage. They requested 50 units. the cost of the unit, $55. So the total cost was this $2,750. So then we're going to add up the balance. This is what we still have sitting in our materials. After we issued 50 materials, we're left with 150 units. So this is the balance that we're left with. And then on the 14th, we issued some more, and this was the balance that we were left with here. A materials requisition is a request to transfer materials to the production floor. So we can't just go in the inventory or the materials and grab what we need or what we want to use. We have to actually like fill out a form and request it. Otherwise, if we're just going and we're just grabbing random items to create, I mean, not necessarily random. Okay, let's say that we need a keyboard for every single computer, every single tablet that we sell needs a keyboard. Well, we still can't go and just grab these keyboards, because if we're just going in the room and we're grabbing a keyboard for every tablet that we sell, well, our business thinks we have 200 keyboards sitting in there, and so they're not going to order any keyboards for a while because our inventory shows that we have 200. But then we go in there to grab a keyboard, and we don't have any. They're all gone. Well, what happened? Our inventory shows 200, but we have 0. So we have to go through the proper paperwork to get those keyboards and send those out. If we ended up with that scenario and didn't have any keyboards, that would make our customers very angry, because they would have to wait, because now we have to order keyboards and we have to wait to get those to then send to our customers. Because we can't send them half of what they ordered. That'd probably be worse than getting it late. So it is proper. You do need to go through the proper channels to get your materials and stuff. And then, so using materials, so this is on page 876. So we've got the job number that we're working on. So we're working on job 27. The customer is Central College Bookstore, and they requested 15 tablets with e-learning software. So we're going to fill this out. They requested it on the 14th of January. The request number was request number 342. The amount was $825. And so that's how we record our job cost record. Does anybody have any questions about any of this so far? All right, so now transaction 2, materials used. So Smart Touch Learning worked on many jobs during the year in addition to job 27. In 2018, the company used materials that cost $355,000, including batteries, processors, and cases. The amount includes the materials used in job 27 as well as all the other jobs that the company worked on during the year. These materials can be traced to specific jobs and are all direct materials. The cost of direct materials is transferred out of raw materials inventory and is assigned to work in process inventory. The individual job cost records would indicate that the amount of direct materials cost assigned to each job. By contrast, the company used materials costing $17,000 that are difficult to trace to a specific job. These costs are indirect materials. The cost of indirect materials is transferred out of raw materials inventory and accumulated in the manufacturing overhead account. The following summary journal records the issuance of the materials that were used in production during the year. So we're going to debit our work in process inventory for $355,000. We're going to debit manufacturing overhead for $17,000. We're going to credit raw materials inventory for $372,000. Labor. So most companies use electronic labor or time to track labor cost. if a manual system is used, each employee completes a labor time record to track and assign direct labor to jobs. This is an example of a job cost or direct labor record. So they are listing the job. We've already seen this section here on the previous slide. So now we've had some labor involved with this job. So the date that the labor took place was the 15th. The labor time record number is this number here, which is 236. And the amount of labor was $90. In transaction 3, labor cost incurred during 2018 Smart Touch Learning incurred total labor cost of $197,000, of which $169,000 was direct labor and $28,000 was indirect. So we're going to debit work in process the direct labor account for the $169,000, which was direct. We're going to debit manufacturing overhead of $28,000, which was indirect, and we're going to credit wages payable of $197,000. Anyone have any questions on this so far? Okay. Calculate predetermined overhead allocation rate and allocate overhead cost. You guys, y'all are gonna let me skip this stuff? Let me see if I've skipped it anywhere yet. I have. Y'all are letting me skip the try-its. Like, wait a minute, we're already in objective 3 and we haven't had a try-it yet? What's going on here? Okay, so we actually have a try-it on page 873 that we did skip. Sorry about that. That was after process costing. So for this one, hang on. I think what I'll do, I'll just, because these are not very, I'll just open up the solutions for you for the try-it so that you can have the solution, and then if you have any questions around it, you can email or post. Because if you have the question, someone else probably does too. So I'll post these for you. Does that work? Okay. All right. So we'll just go ahead and continue with the next objective. All right. So 19.3, calculate predetermined overhead allocation rate and allocate overhead cost. So how do overhead cost flow through the job order costing system? So we've got, we're referring to transactions 4 through 7, and those transactions are shown on page 881. We debited our manufacturing overhead of $20,000 and credited our accumulated depreciation of $20,000. And that's because we had depreciation on manufacturing plant and equipment. Then in transaction 5, we had plant utilities of $7,000. So we're going to debit our manufacturing overhead for $7,000 and credit our cash account for $7,000 because we paid the utilities. So we credit the cash account. We have plant insurance of $6,000. So we debit manufacturing overhead for $6,000 and we credit prepaid insurance for $6,000. And then we had plant property taxes, which incurred, but we did not pay them yet. So we have these taxes that incurred, but we haven't paid them. So we're going to debit our manufacturing overhead account, and we're going to credit property taxes payable. And so we'll see those entries here. Before the period, calculating the predetermined overhead allocation rate. So we have actual manufacturing overhead costs are not known until the end of the period. We don't know what our manufacturing cost is going to be until after we have incurred that cost. Things change. There's a lot of variable costs. Variable costs are costs that change, right? Variable moves, changes, fixed stays the same. So like our power is variable. The amount of power that we use changes from month to month. So we don't know what that overhead cost is going to be until the end of the period. So managers have to use a predetermined overhead allocation rate to allocate the cost to the job before the end of the period. So we have this job that we're working on and we're incurring cost for that job, but we don't really know how much that job is going to be until it's complete. But we still have to figure out how to cost for it. So we have to use a predetermined overhead allocation rate to do that. An allocation base links the overhead cost to the job, and the primary cost driver causes an increase or a decrease in the cost. And we'll see on page 882, they're giving us the formula to calculate the predetermined overhead allocation rate. So to calculate the predetermined overhead allocation rate, you take total estimated overhead cost divided by total estimated quantity of the overhead allocation base. And then if you look a little further down, we actually have an example. So Smart Touch Learning uses only one allocation base, direct labor cost, to allocate manufacturing overhead to jobs. At the end of 2017, Smart Touch Learning estimated that total overhead cost for 2018 would be $68,000, and direct labor cost would total $170,000. They want us to compute the predetermined overhead allocation rate. So we're going to plug those numbers into this formula. So the 68,000 divided by the 170,000 equals 0.4, and we're going to convert that into a formula, into a percentage. So that's 40% of our direct labor cost. Our predetermined overhead allocation rate is 40% of our direct labor cost. So before period calculating, okay, so common manufacturing company cost drivers. We have direct labor hours, direct labor cost, and machine hours. These are all common manufacturing company cost drivers. Direct labor hours, this is for labor-intensive production environments. So environments where labor is intensive. Direct labor cost, this is for labor-intensive production environments. And machine hours, this is where machine-intensive production environments. So if you're thinking like, okay, so going back to like construction and building a house, that's probably more labor-intensive than machine, right? Because you more than likely have people building the houses. But then if you think of like, I don't know this 100%, but maybe like a car assembly line, I hear that most of that is put together by machine now. So, so that would be more machine intensive. So you can have different drivers, different cost drivers, depending on the type of business that you're in. Back to the so over here, back to our cost record, we're still looking at job 27, and we have now incurred, we've got this manufacturing overhead. We figured out our rate of 40%. So, and we've also had a couple of additional events take place. So we've had to pull more direct materials. We've had more labor involved in this job as well. And then, you know, again, like I said, we've got this, we have determined what our allocation rate was, which is 40%. And I just want to note that on page 883 at the bottom, there is the formula to calculate your unit product cost. So to calculate the unit product cost, you're going to take the cost of goods manufactured divided by the total units produced, which is 15 tablets here, equals the unit product cost, which is $300 per tablet. And they have that shown right here at the bottom. All of that is on 883. So now, so we've worked on many jobs, including job 27. We allocated our manufacturing overhead to each of the jobs, including jobs that were still in process. Our total direct labor cost was $169,000. So total overhead allocated to all jobs is 40% of the $169,000 direct labor cost, or $67,600. So we're going to create our journal entry to allocate the manufacturing overhead cost to our work in process inventory. And to do that, we're debiting work in process inventory for $67,600, and we're crediting manufacturing overhead for the same amount. At the end of the period, we're adjusting for over-allocated and under-allocated overhead. So our overhead costs are allocated based on a predetermined overhead allocation rate. Our manufacturing overhead is a temporary account and must have a zero balance at the end of the period. A debit signifies actual overhead was greater than allocated overhead, and a credit signifies actual overhead was less than the allocated overhead. Any questions on this so far? Next, we're going to record the completion and sales of finished goods. So what happens when products are completed and sold? After accumulating, assigning, and allocating the cost of direct materials, direct labor, and overhead to jobs, a company accounts for the completion of the job, they account for the sale of the job, and they adjust manufacturing overhead at the end of the period. Transaction 9. So on page 885, the $644,600 cost of goods manufactured is the cost of all the jobs that Smart Touch Learning completed during 2018. Normally the entry would be made as each individual job is completed, but we are showing it as one summary journal. The cost of goods manufactured is transferred from work in process inventory to finished goods inventory as jobs are completed and moved into the finished goods storage area. Smart Touch Learning records goods completed in 2018 as follows. We're debiting finished goods inventory for $644,600, and we're crediting work in process inventory for $644,600. And then during 2018, the tablets were sold on account. So to record that sale, we're debiting our accounts receivable, and we're going to credit sales revenue for the $1,200,000. The goods have been shipped to customers. We're going to assume that Smart Touch Learning uses a perpetual inventory system, and the company must decrease their finished goods inventory account and increase their cost of goods sold with a journal entry. So to do that, we're going to debit the cost of goods sold account by $584,600. We're going to credit our finished goods inventory account by $584,600. And it shows the T accounts as well. If you wanted to see how that affected the T accounts, you can see that on page 886 in the book. Are there any questions on that? Okay. We're going to adjust for over allocated and under allocated overhead. So how is the manufacturing overhead account adjusted? Companies must adjust the manufacturing overhead account for any over or under allocation of overhead. Under allocated overhead occurs when actual manufacturing overhead costs are more than the allocated manufacturing overhead cost. Over allocated overhead is the opposite. So the costs are incurred when the actual manufacturing overhead costs are less than the allocated manufacturing overhead cost. And honestly, sometimes it's easier to just literally like write that out. It's not showing there. So here we have transaction 12. So we're going to adjust manufacturing overhead. During the year, the manufacturing overhead account is debited for the actual overhead costs that we incurred. And we're going to credit for any overhead cost that was allocated to the jobs. So we have a credit to manufacturing overhead of $15,400, which we need in order to bring the account to a zero balance. So to do that, we debit our cost of goods sold for $15,400, and we credit our manufacturing overhead for $15,400. How is the manufacturing overhead account adjusted? So this is on page 888. And before the period, we're going to calculate the predetermined overhead allocation rate. And this is our formula to do so. To find the predetermined overhead allocation rate, we take total estimated overhead cost divided by total estimated quantity of the overhead allocation base. Then during the period, we're going to have to allocate the overhead. To allocate our manufacturing overhead cost, we take the predetermined overhead allocation rate that we calculated before the period. We multiply that by the actual quantity of the allocation base used by each job to get the allocated manufacturing overhead cost. And then at the end of the period, we adjust based on if we were over or under allocated. So we adjust for zero, right, to bring the balance to zero. And this is just like this is an easy way to kind of help you with that. So if you look down here, if the actual cost were more than allocated, that means your manufacturing overhead is going to be under allocated or understated. Instead of it being 10,000, it was actually 10,000, but we stated it as 8,000, so it was understated. Your cost of goods sold would be under costed. We didn't charge enough. We didn't cost enough. And so if that is the case, when you create your journal entry to fix this and to adjust for the manufacturing overhead, your journal entry would be a debit to cost of goods sold, which increases your cost of goods sold because it was understated. And you would credit your manufacturing overhead to decrease it. For your actual cost, if they are less than your allocated cost, then you had an over-allocated manufacturing overhead, over-costed cost of goods sold, debit your manufacturing overhead, and credit your cost of goods sold to fix that, to adjust it. And so now we're seeing a summary of all of the entries that we have walked through for Smart Touch learning. This is just showing how they would flow in our software. If we use the software and we're looking at our journal entries, this is just showing us how those journal entries would flow through. This is what our T accounts would look like based on the entries that we've done in those prior transactions. And again, this just shows you the different transaction and what happened within that transaction. The schedule of cost of goods manufactured. Beginning work in process inventory. So to create the schedule of cost of goods manufactured, you start with the beginning work in process inventory. We're going to list out all of our direct materials used. So these are our direct materials. These are the accounts that are within the direct materials. So all of these accounts would be listed out here to figure out the direct materials used. Then we're going to have our direct labor, our manufacturing overhead that was allocated. That's going to give us our total manufacturing costs incurred during the year, our total manufacturing costs to account for, our ending work in process inventory, and then our cost of goods manufactured. This is the income statement. This is on page 891. But this is what their income statement would look like based on everything that has taken place. Does anybody have any questions on any of that so far? No? All right, so calculate job cost for a service company. How do service companies use a job order costing system? Service companies do not have inventory or manufacturing cost. They trace direct labor to jobs. They allocate overhead costs to jobs and compute the predetermined overhead allocation rate. They allocate indirect cost to jobs using the predetermined overhead allocation rate. And they use the costing information to make pricing decisions. Does anyone have any questions about that? No? Okay. So that is chapter 17. We are going to work on some